Hello everyone. Today we're going to be looking at Mullen Automotive, ticker symbol MULN. We're going to try to take an objective and informative tone as we go over the recent data points, the news developments, the updates, and also the upcoming shareholder meeting. Before the video begins, if you like my channel, please don't hesitate to like and subscribe, and also check out the links of my equipment down in the description. Every purchase, not just of the items in the links, that is made using my links on Amazon. In other words, as long as you go on Amazon using my links, I may earn a small commission every time you make a purchase. So thank you very much for your support and your continued presence on my channel, and let's get started. Mullen's pre-market performance does show a 0.5% decline, which is a bit disappointing considering the overall market's rally. There's been a noticeable increase in volume, but much of it is attributed to selling. Recently, there was a significant spike in the price, but it's unclear why it happened at all, as the volume behind it was relatively small. The pre-market and after-hours trading can be volatile, making some investors very cautious. And as of July 31st, there haven't really been any official SEC filings or press releases, which also increased the uncertainty degree in the market. Now, the anticipation is pretty high for the production news, but no official update has been released just yet. Some shipping updates indicate that Mullen received several containers, including the frames for the M3 and the minivan. However, it remains unclear if the full-scale production has begun. The lack of confirmation on this matter is likely affecting investors' sentiment and causing Mullen stock to lag behind the broader market. The short interest in Mullen remains significant with about 120 million shares been shorted, which is about a quarter of the free float. The cost to borrow the shares averages around 9%, falling within the range seen over the recent weeks. Now, as we speak, the shorts seem relatively inactive, with only a slight increase in the number of positions. The upcoming shareholder meeting on August 3rd has many people's eyes peeled. The proposal number 3, suggesting a 1-to-100 reverse stock split, raised the worries among shareholders. Additionally, the proposal number 4, which may impact the proposal number 3, is also a matter of concern. Any reverse stock split decision can have significant implication for Mullen investors. And over the past year, Mullen's actions have been a subject to a lot of criticisms, leading to a damaged investment sentiment and also, a sentiment that people at the top are getting desperate. So, for instance, after being compliant with NASDAQ requirement for 10 consecutive days, Mullen's initiated dilution, further impacted the market sentiment. There is anticipation surrounding the upcoming interview with David Mitchery, the company's CEO, but it's currently under review by their lawyers, and the specific details are not disclosed just yet. Mullen Automotive is a publicly traded company operating in the EV sector, listed on a NASDAQ. The company designs, manufactures, and sells a range of vehicles, including cars, buses, and trucks. One of the key factors why Mullen is set apart from other EV companies is its focus on long-range electric vehicles. M150, a long-range electric truck, can travel up to 500 miles in a single charge, significantly longer than the range of most other electric vehicles currently on the market, which makes it an attractive company to sometimes invest into. Another key differentiator for Mullen is the focus on developing heavy-duty electric vehicles. The company's product line includes electric buses and trucks, which are designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. The company invests in battery technology as well. They have a proprietary battery management system, supposedly allowing vehicles to have a longer range and faster charging time. Then again, I understand that everybody says that. We would have to see whether time proves that this technology is valid and significant for its share price. This technology can be a key selling point for the company because it allows the vehicles to be more attractive to potential clients. Regarding the financial performance, the company has been having a hard time generating income since they don't have any significant revenue streams before the distribution contract in Europe for iGo vehicles. Those vehicles should generate some income and to be reflected in the 2023 financial reports. In terms of long-term price actions, despite the recent upward momentums, the company has been having, I would say, a relatively bearish trend over the past 5 years, trading between $5 to $10 for a long period of time, before peaking around $15 and finally falling to below $1. What this tells us is that Mullen has been hard hit by the ongoing market trends and that its fundamental weaknesses don't help. This assessment has recently begun to change, but in my opinion, hasn't reached a convincing turning point yet. And that right now, this still explains why Mullen is a stock that I would recommend to trade more than to invest in, regardless of the recent good news or whatever they have. The interest surrounding Mullen is mainly the expectation to scalp a quick gain in a matter of days or weeks, either from the short squeeze or from some significant fundamental announcements, not necessarily waiting for dividends from the car sales. With that being said, I also want to add that things can always change rapidly in the sector, so we shouldn't rule this out either. The online communities have been initially skeptical towards Mullen regarding its capacity to survive beyond the medium term, and if there is no more EV hype to fuel the stock price and to provide liquidity. The general mood has since then transformed into a high speaker of whatever the company announces and enhancing it, with sometimes a pinch of optimism in the air, like asking themselves whether Mullen is the next Tesla or if Mitri is the next Musk. Some also express their worries about the company's lack of transparency, and in my opinion, this is a key weakness of Mullen. They don't like saying much about their suppliers, partners, and clients. Sometimes it's because they're less than clean. Other times, it might be because they're not used of giving full transparency. Recently, multiple announcements that the CEO gave to the investors rekindled some optimism, but I believe that more needs to be done in order for this to become an actual tendency. Basically, as far as their online footprint is concerned, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent a signal to the market which reacts accordingly. On top of that, the macroeconomic trends within the sector have been under huge pressure due to the reasons like interest rates, capital flight, conflicts around the world, supply chain issues, and a general decrease in demand in the years to come, which is likely to occur in key markets. Another factor to look at is how the flagship company is doing. In other words, Tesla. The EV sector is a relatively new industry with much of it still in development. Very often, people determine whether they should purchase EV stocks based on whether Tesla is performing strongly. The idea is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of companies like NIO, Lucid, or Mullen following a very similar trend to Tesla. Of course, it doesn't always follow the same trends as the other ones. This can play in its favors or the other way around. With that being said, let's also take a look at Mullen's financials. which can give us some hint about what we should do about this company. The cash balance has been decreasing over time. This is not a new issue, but it's definitely a worrisome one. Because the reason why cash balance is relevant is that it is used not only to finance the operations, but also to meet short-term obligations. If Mullen cannot meet those obligations, the company would be liquidated, with the possibility that none of our investments would be reimbursed whatsoever. The liabilities of Mullen tells us that they are trying to control things. They're trying to show that, they're responsible, they're good stewards of our money. But honestly, I don't think that fundamentals are that important for Mullen in the current stage to begin with. The other thing is, as far as the retail traders are concerned, the financial books is not the first place they would begin to examine companies. The last element to look is the profitability. So we should expect to see something coming out of the IGO distribution contracts when they issue Q4 of 2022 and Q1 of 2023. On the other hand, I do believe that Mullen needs to demonstrate to investors that they can sell their own cars. If that's not the case, it's only a matter of time before time runs out. Overall, the financials of Mullen shows us that the company wants to stay afloat. It is willing and sometimes capable of controlling its costs. But what we need to see is the company's capacity to increase its operational revenue. And hopefully we can see that with the IGO distributions. So, regarding the short squeeze potentials, this is a major catalyst for the company. The reason why it is relevant is because the short positions will tell us about what a significant portion of the market thinks about Mullen, and also whether there will be potentials for a squeeze. Currently, there are around 42.5 million shares been shorted against Mullen. The vast majority of them traded outside of public exchanges, therefore by institutional traders. The potentials for a short squeeze is therefore significant. The short squeeze is a phenomenon observed when traders decide to collectively back up the price of a stock, forcing those holding the short positions to redeem. It's important to note that the short interest is not a guarantee of a short squeeze, but still a metric monitoring by the investors. The redemption acts as a purchase in the open market, which will push the stock price to higher levels. And personally, I think it's worth considering that the short sellers may have valid reasons for their bearish sentiment. There obviously is. Mullen is not one of those well-managed companies or with a very clean history. With that being said, I do believe that this can be one of the key reasons why people want to buy Mullen, including ourselves. So overall, my conclusion about Mullen Automotive stock in the current stage of things is that the company is experiencing a lot of uncertainty due to the lack of production news and the upcoming shareholder meeting. The investors are closely monitoring the situation, especially regarding the possibility of a reverse stock split. I would say the transparency and future actions from the company will be vital in restoring investor confidence. As of now, we are expecting greater levels of volatilities going forward, so I would personally recommend to hold on any further investing or buying just yet.